Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Friday, December 5th. We made it. It's all but the weekend. We've got a couple of good football games on this weekend. If you're a poor Husker fan like myself, we've moved kind of past the football season. It is the tail end of volleyball season. We got the National Championship Tournament that starts today, so go Big Red there. Officially a volleyball school in the month of December for here and forever. Now that we got that out of the way, we'll jump into the charts. It was a little bit of a choppy trade in corn this week. At the Friday's close, March futures down 2.5 cents, 4.44 3/4 the settlement there. That was 3 cents lower for the week. As you can see, we went nowhere fast. We spent majority of this week's time sandwiched between the 20 and the 200-day moving average. And you can see down here the 14-day average true range continues to narrow up. So not a whole lot of excitement there. But really that kind of sums up the corn market for the better part of the last couple months. If you zoom out and look, between the end of October to where we are today, outside of, I'd say, a handful of sessions, we've spent the bulk of our time between 440 and 450. So I wouldn't be surprised to see that range continue to play out. Hopefully we can eventually break out to the upside, but we're going to need a friendly fundamental catalyst, I think, to do that. Potentially that comes from Tuesday's WASDE report, potentially from elsewhere. Nonetheless, here we are, smack dab in the middle of, like I said, the trading range. Trendline support still intact. Must hold support 440, 439. A break and close below there would neutralize some of our optimism going forward. Now, over on the soybean market, we tried to be optimistic this market, but it just really couldn't really get any mustard going above the top end of this risk range, 1135, 1137, the break below the 20-day, and then just a continued bleed lower. And we talked about the potential risk of the head and shoulders formation building for the better part of the last 2.5 weeks, and boy, did that play out. Basically textbook, almost like too perfect, where everybody and their dog saw it coming. Here we are, down on the day, pretty good, 14.25 cents, settling at 11.05 for the January contract. That was 32.5 cents lower on the week. There's some psychological support in these lows from November 6th here. $11 to 11.03.5 below that, and it's that original breakout point that we've talked about in the past, which comes in the mid 1080s. So if the bulls can't find their footing to start next week's trade, there's still some air underneath the market. I think that would probably be a pretty good support pocket down here if we were to trade down here for a potential setup for a reversion back to the upside. Now, how big of a reversion back to the upside, I don't know that I'd be holding my breath for a retest of these highs, but I think there could be some value there, especially if China does take advantage of lower price action in the futures market. I guess if you do take out that mid-1080s breakout point, there's still that gap down from on October 27th. That comes in about another 20 cents below that. So some price targets to keep an eye on that front. Definitely a very ugly chart setup for sure. Now, over on the wheat market, it was wildly uneventful this week. Just traded along the 50-day moving average again for basically the second straight week. March Chicago futures down 4.5 cents today, 5.35 3/4. That was 2 3/4 cents lower on the week. I think we could continue to see this market hold here. There's a little bit of a gap over here from October 27th. That's about 5.28 to 5.30. We tested and held that early in the week. And I think that's probably a decent value zone, or at least a good risk-reward setup. A break and close below there, you rip the Band-Aid off, you know that you're wrong. But from a risk-reward standpoint, might not be a bad spot to take a stab at the long side with tight risk management. Now on the upside, bulls really want to see consecutive closes out above the top end of this recent range that we've been in, which coincides with the 20 and 100-day moving averages. That's about 543, 545 above there, and you could start to see some technical momentum build. Now, over to the livestock side of things, that's where a lot of the optimism was at in this week's trade. Just a huge move higher. February live cattle futures, $3.15 higher. 227.15 was the settlement there. Extended gains for the week to $9.30. As you can see here, we're back at the 50% retracement in very short order. That's about 227.30 from these highs to these lows. There's a little bit of overhead resistance as well at the 50 and 100 day moving averages, and then this box, which was the old highs back in August, the breakout point, support, and then the breakdown point. So there's a big hurdle, I think, from 230 to about 232 in this February contract. If you're a hedger who needs to get some protection, this is going to be the spot to look at on the first test. If we fail out there, potentially a pullback to these moving averages. Ultimately, I kind of see this market developing a little bit more of a range-bound trade. Obviously, it's been straight back up, but the daily average ranges have come in a little bit. And I think the overall volatility continues to come in. That potentially sets us up for somewhat of a range-bound trade going forward. So if I were to just say, hey, this is the range to look at going forward, this would be the upper end, 230, 232. And then on the downside, you're looking at 220. So ultimately, 220, 230, plus or minus a couple bucks. Really wouldn't be surprised to see the market nestle in and find a little bit of a home there. Now, over on the feeder cattle side of things, right back to the 50% retracement as well. You've also got the 100 and the 50-day moving average coming in at about the same point. That's right near 340, which happens to be the low end of this gap from October 27th. I don't know that we're going to be able to close this gap all at once. I wouldn't be surprised to see us work into it ultimately. Again, if you're a hedger, I think this is probably an area where you want to play a little bit of defense, especially after this big move higher. That's over a 10% move in just a couple of weeks, so I think you're going to want to capitalize on that and protect the downside in case we do get some sort of mean reversion back a little bit lower. Now, wrapping things up today, lean hogs, that has been kind of a dark horse for us. There's been some rumor circulating with regards to African swine fever over in Spain, and that potentially leading to some import controls from other countries. And so I think that catalyst could eventually lead to a breakout here. We had a nice move that got us back to some major moving averages, as well as these November 11th highs. That comes in near 87, 87.20 for that April contract. If we can get out above there, potentially get some more momentum building on that front. I really wouldn't be surprised to see that happen. I think the African swine fever headlines are probably just getting started. I wouldn't be surprised to see more of those in the future and potentially have that add a little bit of premium into this market, especially some of those deferred contracts. So that's what we're looking at to round out the week. I hope you all had a great trading week. I hope you all have a great weekend. If you have any questions at all, don't hesitate to reach out. We are always ready, willing, and able to help. We will be sending out some estimates with regards to Tuesday's WASDE report, probably here this afternoon. So be sure to check your inbox for those or the portal at bluelinefutures.com. So that's a wrap. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.